Want to know how you can make money while you sleep? Let's dive into the world of dividend investing. Imagine receiving regular payments just for owning a piece of a company. Sounds intriguing, right? Well, that's exactly what dividends do. Today, we're breaking down how to profit from dividend investing, and I promise you it's easier than you think. We'll cover what dividends are, why they can be a game changer for your investment strategy, and how you can get started. So, grab a notepad and let's jump in. First off, what exactly are dividends? Simply put, dividends are a portion of a company's earnings distributed to its shareholders. Think of it as a reward for being a part owner of the company. For example, if you own shares of a company that pays a quarterly dividend of $1 per share and you have 100 shares, you'll receive $100 every 3 months. That's money in your pocket just for holding on to your investment. Now, why consider dividend investing? Well, there are 3 main reasons. 1, they provide a steady income stream, which can be especially appealing if you're looking for passive income. Think of it as earning a paycheck without having to clock in. 2, dividends can help cushion your investment during market downturns. If the stock price dips, those dividend payments can soften the blow. 3, reinvesting dividends can significantly boost your returns over time. Imagine this. If you reinvest your dividends, you're buying more shares, which means more dividends down the road. It's like a snowball effect. Now, let's talk about the types of companies that typically pay dividends. Most dividend-paying stocks come from established, stable companies, often in sectors like utilities, consumer goods, and healthcare. These are companies that generate consistent profits and have a solid track record. For example, think of iconic brands like Coca-Cola or Johnson & Johnson. They've been paying dividends for decades, proving their reliability. But how do you choose the right dividend stocks? Here are a few key factors to consider. First, look at the dividend yield, which is the annual dividend payment divided by the stock price. A higher yield can be tempting, but be cautious. Sometimes a high yield can signal financial trouble. Second, check the company's dividend history. A company that has consistently increased its dividend over the years demonstrates stability and confidence in its business. Third, consider the payout ratio, which shows what portion of earnings is paid out as dividends. A lower payout ratio usually indicates that the company can sustain its dividend even during tough times. Let's put this into perspective with a relatable example. Imagine you invested $1,000 in a company with a 4% dividend yield. You would earn $40 annually just from dividends. If you reinvest those dividends in 10 years, assuming the stock price grows and the company continues to pay that 4% yield, you could be earning much more. Over time, your investment can grow exponentially, turning your initial investment into a much larger nest egg. Now, some of you might be wondering, what's the catch? Like any investment, dividend investing isn't without risks. Market fluctuations can affect stock prices, and there's always the chance a company could cut or eliminate its dividend. It's essential to diversify your portfolio. Don't put all your eggs in one basket. By investing in a mix of dividend-paying stocks from various sectors, you can mitigate risks while still reaping those sweet dividends. Before we wrap up, here are some key takeaways to remember. First, dividends can provide a reliable income stream and help cushion your investments. Second, focus on companies with a strong dividend history and reasonable payout ratios. Third, always diversify to reduce risk. And finally, consider reinvesting your dividends to harness the power of compound growth. So, are you ready to start your journey into dividend investing? If you are, drop a comment below and let us know your favorite dividend stocks or any questions you might have. And before you go, next time we'll explore an asset class you might not be paying attention to: real estate investment trusts, or REITs. Trust me, you won't want to miss it. Happy investing!